Hi everyone, welcome. I'm Annabelle, Talent Creator Coordinator at BioBuzz. Today we're very excited to have everyone here today as part of our first Career Catalyst and Community Office Hours of 2025. And today we're joined by not one, but three amazing guests from Weyrich, Cronin Sorra, LLC. We have Emily Wagner, CPA, Audit and Tax Manager with over 10 years of experience in public accounting. We also have Erika McNamer, EA tax expert specializing in small business returns. And last but not least, we have Frank Linkus joining us today, CPA and partner at WCS. Today, they're going to be sharing how to simplify your tax filing process as independent consultants and freelancers. And before we get started, I do want to give a big thank you to our sponsor, BioTrack, for supporting this program today. BioTrack is a huge resource for upskilling in the life science in Maryland. They've trained over 17,000 scientists with cutting-edge biotech workshops. You can visit biotrack.com to learn more. And I also want to mention that this event today is part of our BioBuzz Talent Lab, your one-stop shop for career growth, job opportunities, and industry connections. You can join our Talent Lab today for more opportunities like this. All right, so let's get started. I'm going to hand it over to our guests, Emily, Erika, and Frank.
Thanks, Annabelle. Hi, everyone. Welcome. As Annabelle said, I'm Emily Wagner. I'm a CPA manager at the accounting firm Weyrich, Cronin Sorra. I'm a graduate of Stevenson University, and I have about 10 years of experience in public accounting, mostly doing various types of income tax returns. And then I've also worked on audits, compilations, and reviews for employee benefit plans, various profit entities, and some non-for-profit entities. I have Erika McNamer presenting with me today. She's a graduate of York College of Pennsylvania. Erika has about 8 years of experience in preparing tax returns and tax planning with a focus on small business returns. She also has obtained her certification as an IRS enrolled agent. And today, Erika and I are going to be presenting accounting and tax tips for independent contractors. Also with us is Frank Linkus, CPA, a partner with Weyrich, Cronin Sorra. He has extensive experience in taxation, including tax preparation, planning, multi-state compliance, and tax research. Frank is also the treasurer for the Harvard Community College Foundation. All right, next slide, please. All right, today we're going to be, like I said, discussing accounting and tax tips for independent contractors. We'll be touching on the following topics regarding independent contractors: 1099 NEC implications, business expenses, the home office deduction, self-employment taxes, estimated tax payments, client accounting and other services, and then, like Annabelle said, we'll have a question and answer session at the end. All right, next slide, and then I'll let Erika get started on 1099 NEC implications.
Thank you, Emily. 1099 NEC implications. The independent contractor definition is a self-employed person that is contracted to perform work or provide services to a company as a non-employee. The general rule is that you are an independent contractor if the person who the services are being performed for has the right to control or direct only the result of the work and not what will be done or how it will be done. Next slide. What is a 1099 NEC? It is a tax reporting document for independent contractors. Companies are required to issue them to anyone that they have paid $600 or more for the year. They are required to be sent out by January 31st. It is the equivalent to a W-2 that you receive as an employee of a company. For income tax purposes, you will most likely be filing a Schedule C with your personal tax return. On the slide, you will see an example of a blank 1099 NEC. Next slide. 1099 NEC implications. As an independent contractor, there are some advantages and disadvantages in terms of tax implications. Some advantages are that being an independent contractor, you are allowed to take business expenses. We will discuss that in a little bit. You may also qualify for the Qualified Business Income Deduction, commonly referred to as QBID. For the purposes of this presentation, we're not going to go into the specifics, but it is an adjustment to your income if you qualify for it. Please seek guidance from your accountant or tax preparer in regards to that deduction. You are also eligible to fund retirement plans. There are a few different retirement options for self-employed individuals, such as the Simplified Employee Pension, commonly referred to as SEP, a simple IRA plan, which stands for a Savings Incentive Match Plan for employees, a one-participant 401k plan, as well as a traditional and Roth IRA accounts. Please seek guidance from an accountant or financial planner to set up your retirement plan. Some disadvantages of being an independent contractor are there are no withholdings for taxes, as well as you are subject to self-employment taxes. Next slide. Business expenses. When you are an independent contractor, you are allowed to take business expenses to reduce the profit from your business. Some common business expenses are cell phone expenses. You can deduct the percentage of your cell phone that you use to conduct your business, if it is a cell phone that is used both for your business and personal use. Any supplies are needed to purchase that you need to purchase to complete the job. Some examples are tools or PPE clothing or supplies. It needs to be specific to the job you are performing. When expensing clothing items, they need to be specific clothing items, not common clothing items. Examples of some specific clothing items are safety boots with steel toes, high visibility or fire retardant clothing. Professional services and/or licenses. If you're using a bookkeeping or accounting services for your business, you can deduct the cost of those professional services. If you must maintain certain licenses, their costs are also deductible. If you are required to take any continuing education credits for a license, you can also deduct those costs. The health insurance deduction. You may be able to deduct the amount you paid for health insurance, which includes medical, dental, and vision insurance and qualified long-term care insurance for yourself, your spouse, and your dependents. To qualify for the health insurance deduction, you must have had a net profit on your Schedule C. There are additional rules for business entities to take the deduction. Now, vehicle expenses are calculated either utilizing the standard mileage rate or actual expenses. For 2024, the standard mileage rate is 67 cents per mile. The rate is adjusted for inflation each year. For the tax year 2025, the standard mileage rate is 70 cents per mile. To take those expenses, you're going to need to have a mileage log, which records the date, the miles driven for the business, and the purpose of the trip. You will also need to know the total miles driven for the year, as well as add up all your total business miles. If you are using actual expenses, you're going to need your gas, insurance, and any repair and/or maintenance costs for the vehicle. Now, majority of independent contractors end up using the standard mileage rate for their vehicle expenses due to the fact that they're using their vehicle for both business and personal uses, as well as for record-keeping purposes. Taking the standard mileage rate is easier. Less records are needed. You will need your vehicle information, the type, the total miles put on the vehicle, and the total business miles for your tax professional. The home office deduction. Emily will be discussing this direct deduction in more detail next. Next slide.
Thank you, Erika. Another deduction that is available to independent contractors and the self-employed, but is not available to regular W-2 employees, is the home office deduction. To qualify for the home office deduction as a self-employed person or independent contractor, there are two tests that the home office space would need to pass in order to qualify. The first test is that the area of the home office must be used regularly and exclusively for your business. We'll talk about what regularly means a little bit in the next test, but exclusively, of course, means exclusively. It can't be used half the time as personal storage or a guest bedroom. It has to be used exclusively for the home office. The second test is the principal place of business. That's where the home office must be the principal place of business as well. Now, if somebody is out in the field working a lot in a lab, on a site, if that person, as a self-employed person, still needs a place to run management or administrative tasks, then in that case, they would still meet that test and still qualify for the home office deduction in that case. There are two ways to calculate the home office deduction. One is relatively simple to calculate, but the deduction is limited. The second way isn't limited, but is more complicated to determine, since you need to know the amount of your direct and indirect expenses for the home office when you go to file your returns. The first way to calculate is called the simple method. It is called the simple method since you only have to determine the square footage of the home office space. The deduction is $5 per office square foot, with a maximum annual deduction allowed of $1,500, or saying it another way, $5 multiplied by up to 300 square feet. The second method is more complicated since you have to also determine the amount of many expenses of the home, such as rent or mortgage interest, real estate taxes, insurance on the home, utilities of the home. These things are generally called indirect expenses, and you would also need to know the square footage of the total home so that you could allocate these indirect expenses, a portion of them, to the home office for the home office deduction. Direct expenses of the home, such as painting just the home office, if that were needed, that would qualify. That would be 100% deductible. You wouldn't have to allocate that. But on the opposite side, expenses only benefiting other parts of the home or generally expenses outside of the home would not qualify for the home office deduction. All right, next slide, please. All right, so we talked about a lot of the business expenses that are available for self-employed people when they go to file their tax return. One of the things that we definitely wanted to note in this presentation is while employees pay Social Security and Medicare taxes each paycheck, independent contractors are alternately taxed self-employment taxes each year if they have a profit. The good news about having a taxable profit means you're paying into your future Social Security benefits. To calculate self-employment taxes, you're taxed on 92.35% instead of 100% of your taxable profit. You also do receive a deduction of half the self-employment taxes when you go to file your return. However, you must pay both the employee and employer portion for self-employment taxes. So when employees are generally assessed 6.2% for Social Security on their paycheck, the self-employed, they would be taxed 12.4% because they also have to pay the employer portion of that tax. For Medicare, it's the same thing. Instead of 2.9%, instead of 1.45% for Medicare, you would be taxed 2.9%. You are essentially paying double since you have the employer burden as well, but you do receive a few benefits when you go to file your return, not being taxed on 100% and getting a deduction of half the taxes. Self-employment taxes are also in addition to federal income taxes and any applicable state and local income tax. Since none of these taxes are withheld from a reoccurring paycheck, the self-employed or someone working as an independent contractor for any substantial income or part of the year would want to plan properly and pay something called estimated taxes throughout the year, which Erika will discuss next. Next slide, too, please.
Thank you, Emily. Estimated payments. Your quarterly estimated tax due dates for the IRS or the federal government are April 15th, June 15th, September 15th, and January 15th. Generally, the states have the same date for their estimated payments as well as federal. You're going to want to verify that with your individual state. Most likely, you'll be making quarterly payments to the IRS, federal government, as well as your state revenue department. You calculate your taxes based on the net profit of your business, not your gross income. Remember, to calculate the profit of your business, you're going to take your gross income and subtract your expenses, which results in your net profit for the business. When calculating your estimated tax payment for the federal government, you are accounting for both your self-employment and income taxes. It is important to make estimated tax payments so that you aren't subject to the underpayment of estimated tax penalty, which can be assessed both on the federal and on the state level. Next slide.
Firms like Weyrich, Cronin, and Sorra offer a variety of planning services. Two of the most common ones for small business owners are entity planning and tax planning. Entity planning involves the utilization of S Corps and the pass-through entity deduction to minimize taxes. Tax planning for small businesses involves a 360-degree view on how to minimize the impact taxes will have on your business, as well as calculating estimated tax payments. Next slide, please. Many self-employed individuals have enough transactions where they need an accountant or bookkeeper to help track and record their income and expenses. Things like business loans, equipment depreciation, etc., can further complicate these accounting records. Firms like Weyrich, Cronin, and Sorra can help you with tax planning and compliance, but we also have a client accounting services department that can provide small businesses with the following daily and monthly record-keeping tasks, including, but not limited to, recording cash disbursements and deposits, preparing and posting adjusting journal entries, preparing and updating depreciation schedules and asset purchases, verifying and recording new loan documentation, recording credit card activity, reconciling employee earning records to payroll reports, preparing and reviewing bank reconciliations, and providing updated internal financial reports for your business.